Okay, now we're going to come to the part in the show that I call Freeman's Rant. We're workshopping that title. Maybe we can come up with something more fun later on. But I was, I like doing education, and I like talking about these things. And so I signed up with a nonprofit that does financial education for communities. And so they basically say, hey, we want to teach these classes, but we need someone local who's experienced to teach them. You want to do that? And so I'm like, yep. And so I taught a couple of workshops on taxes, which were great. And then I signed up for one for Social Security, and I just taught it last night. And so they talk about Social Security, and then they go into, hey, this is just part of the puzzle. Here's a bunch of other parts. And so these are the actual slides from the presentation. And so they go through some of these things, and so here's the first slide, right? And so they're talking about, income from retirement accounts, Roth IRAs, 401ks, etc. So they got 3 pros on here, 3 cons. Okay, missing some obvious pros. Not sure these are even the best cons, but whatever. It's important to do pros and cons. Then they got defined benefit plans, 3 pros, 4 cons. Okay, really leaning into the cons on this one. And then they go to general investments, right? Dividends and interest from stocks, bonds, mutual funds, etc. So this would be like your non-qualified or your brokerage accounts, right? 3 pros again, right? And then 5 cons. And so they're loading up more and more on the con side, right? This is not like a 3 pros, 3 cons for each one, and really honing in on the risk here, right? And then they go to annuities, which they first list out a couple of different types, and then 3 pros, just 1 con, which is they often require a long-term commitment. And they do have a bunch of fine print down here, which I'm sure you can't read, and neither could the people sitting in the classroom. But I decided I needed to fix the slide for them, because it makes no sense, right, to say, hey, for these ones over here, we're going to go 3 and 3, 3 and 4, 3 and 5, really, again, making investments, making Roth IRAs, making all these things seem worse. And then for annuities, do 1 con. So again, I fixed it. The different types of these accounts are bad, terrible, and the worst product ever. The pros, which again, I think they were misleading. You maintain control of the account. Not really. You have way less control over annuities than you do the other types of accounts. And so to say, hey, you get to keep this control and you don't on these other ones is absurd. Here's a huge benefit, right? You get tax deferral on earnings, no mandatory distributions. But all those distributions that you do are all treated as ordinary income instead of capital gains. And there's no step-up in basis for heirs. So they're going to pay taxes on all of it. There's potential guarantees at a huge cost, right? They often require a long-term commitment. Yeah, because you're going to pay a huge surrender penalty if you don't commit long-term, right? They have high fees, bad performance, hidden company-favored loopholes. So if the product's not working the way the company wants it to, they can pull some levers and make it work better for them. They provide, yes, a guaranteed principal and income, usually a flat income amid rising costs, which I, again, channeled a lot, and how terrible that is in this book here. There's guarantees, or maybe they would have guarantees, but for rising income, but you could do better by just putting it in a bank and pulling money out at that point. So annuities in general are terrible. Most of them are super bad. Some are okay. They're never my first choice. But what just irked me, let me get to the next one first. Life insurance. Again, know the difference. 5 pros, 1 con, which is con. It takes time to get the plan up and running, which is the most absurd combination of pros and cons for a neutral third-party educational content venue. And I ran this past a few of the other planners in our office, and they were all like, what? Are you kidding me? So again, I fixed the slide to present it. They're terrible, great. If you need term life, get it. I've got a bunch. Again, we can tell you whether you need it or not without the commission incentive. But pros, I just had to make sure that you know that there's actually cons to each of these pros. Borrow income funds, loans, and take withdrawals up to cost basis. Tax-free loans is great. Yeah, and you pay interest on your own money to use it. That's not much of a pro. No penalties for early access, but there's not much to access. So again, not really a pro. It takes time to get the plan up and running, aka you are guaranteed to lose money on these plans for 10 to 20 years before you finally break even and then have terrible long-term rates of return on the cash value. And the rates of return on the death benefit are not that great long-term either. And the short term, just use term. So anyways, I've got other videos on whether you should get life insurance, whether you should buy annuities, all those things. We might hit them again. But the thing that really bothered me was, right, in a nonprofit education setting, that they're going to, the way that they did pros and cons, right, making all these other plans seem worse by adding a lot more cons, right? 3 pros, 5 cons, and then 1 con for these other ones. That's misleading, right? That's lying. And so I made, actually, I think I forgot to put it up here. Oh, there it is. So I also just made this, and I'm not supposed to mess with the slides, but I did it anyway. Which is just where's your sources of financial information coming from, right? And so you got these nonprofit education, which again, the pro here is that there's no apparent profit motive. It's supposed to be a nonprofit. The con is that their material is coming from somewhere. So someone wrote this presentation for them, and they spun it so that people can teach it and then use it to sell life insurance and annuities as a supplement to Social Security. So it's not this whole non-biased thing that we get, right? Media, YouTube, blogs, right? Pro, free content. This is free to you. You're not paying to watch this. Awesome. But the con, right? Like a lot of media exists to drive ad revenue, right? Trying to get eyeballs, trying to get clicks so that we can sell ads. And that's how they make money, right? No one's doing it truly for free. So either they're doing it to drive ads, or like me and a lot of the people, they're doing it to hopefully that you engage with them. But right, no one's doing this ultimately for free. Commissioned financial advisors, you get one-on-one information specifically to you, right? Versus a whole bunch of general information, and then you have to try to figure out what you're doing. But of course, they get paid more to recommend bad products than good ones, always. The worse the product, the more they pay. And so you have a big conflict of interest there of, can you really overcome and have an objective view of bad products when you get paid multiples more to sell them? And then you have fee-only financial planners. One-on-one advice in your best interest, has to be best for you. Doesn't get paid anymore to do one thing or another, right? That's great. The con is they're more expensive. Although I would say, right, if you paid nothing for commissioned financial professional and you end up with an extra $100,000, and you paid 10 grand for a fee-only planner, but you ended up with an extra $400,000, which one was more expensive? And I would say that the free one was $300,000 more expensive than the $10,000 fee-only planner, right? Now, totally biased. I'm totally biased in that. But I did come from the commissioned world, so at least I know what I'm talking about. So just be careful. This is my main, like, know what the conflict of interest from the source that you are listening to is, would be my main message, right? You know what my conflict of interest is, right? I am doing this. I've said this in other videos. I'm doing this because I am passionate about educating people. I'd rather educate people than sell them. If people like the way that I talk, the way that I plan things out, the way we think through things, and they don't want to do all the work to figure it all out themselves, then they can know and trust me and pay me to do it for them. That is my motive, right? I just think we do it better than that our form of doing it is better than any other one. But you'd want to know what that motive is and what any conflicts of interest are before you take advice from randos and even nonprofit educational workshops. So there we go. Rant over. Be careful